Welcome to your weekly global financial update. This week, the world's central banks took center stage, corporate earnings sent shockwaves through markets, and oil prices took a dramatic turn. Let's break down the numbers that moved the world in just 5 minutes. For first up, central bank decisions. As expected, the U.S. Federal Reserve held interest rates steady this week. However, Chair Jerome Powell struck a hawkish tone, signaling that persistent inflation means rate cuts are likely further off than markets had hoped. This pushed the U.S. dollar to a multi-week high. Across the Atlantic, the European Central Bank also held rates, but strongly hinted that a cut could come as soon as June, citing a slowing economy. The Bank of England followed suit, holding UK rates, but with growing dissent among policymakers for a cut. The message is clear. The US and Europe are on diverging paths. The earnings season delivered a mixed bag, creating huge winners and losers. Tech giants were in focus. Apple reported a drop in iPhone sales, sending its stock lower, while Amazon surged on powerhouse earnings from its cloud computing division, AWS. In the energy sector, Shell posted profits that beat expectations, but that leads us to our next big story. While oil prices crashed this week, with Brent crude falling nearly 7% in its worst week in months. The drop was fueled by two factors: rising U.S. inventories pointing to weaker demand and renewed hopes for a ceasefire in Gaza, which would ease fears of a broader Middle East conflict disrupting supply. This pullback offers some relief to consumers and central banks fighting inflation. And now, your quick-fire headlines from around the globe. The Japanese yen hit a new 34-year low against the dollar, prompting suspected intervention from Tokyo. Tesla stock jumped after the company received approval for its self-driving technology in China. First Republic Bank shares were delisted, a final chapter in last year's regional banking crisis. Stay tuned, it's a volatile world out there. That's your 5-minute tour of the global financial landscape. Markets remain highly sensitive to inflation data and geopolitical news. Like this video if you found it useful.